Hello and welcome to Pro Trader Strategies market commentary for Wednesday, November the 1st. Hope everybody had a great Halloween and got their fill of candy. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, we've got a lot to go over today. Across the pond, French and Italian bank holidays. We did get some Great Britain manufacturing PMI came in at 56.3, expected to be 55.8. Being a holiday across the pond, not a whole lot of other data coming out of there, but we did here in the United States get ADP non-farm employment change came in at 250,000 or 235,000 hires, expected to be 202,000 hires, so better than expected there. That means more hiring going on. That's good, but last month's number revised down from 135,000 down to 110,000, so pretty much a wash on those two numbers when you're looking at it. And a lot of people like to look at ADP as a reference to what we'll see coming up in the non-farm payrolls on Friday. So non-farm payrolls definitely more important, but a lot of people are looking at ADP more often now than what we used to in the past. In the past, it was kind of a bit of an indicator, but it was really all over the place and didn't really give you a very nice representation as to what the non-farm payroll is going to be. So take that for what it's worth. On two other economic data here in the United States, we got final manufacturing PMI came in at 54.6, and then the ISM, which is the one we're really looking for, which is the Institute for Supply Management manufacturing PMI, came in at 58.7, lower than the 59.5 that was expected, and last month's number remained unchanged. Now remember, anything above 50 is expansion in the economy, and that 60 reading was one of the highest readings we've seen in quite some time, so not really surprising. We're seeing a little bit of a pullback off of that number after that really robust number from last month. And then construction spending came in at 0.3%, expected to be a negative 0.1%, so better than expected there, but again, that number kind of becoming a wash because last month's number revised down from 0.5% down to 0.1%, and that construction spending was a bit of a pullback. Even last month was a little bit lower than expected there, so not great on the construction spending front month over month. And then ISM manufacturing prices came in at 68.5, expected to be 68. That's going to be one of those numbers that the FOMC really kind of looks at because prices paid is inflationary in a sense, so they will be looking at that number. Then we got crude oil inventories came in at a drawdown of 2.4 million barrels, expected to be a drawdown of 1.5 million barrels, so a bigger drawdown by almost 1 million barrels. And that actually originally caused crude oils to really blast higher, testing that 55.24 that we saw happening back in January, early January. So we're at the highs of the year in a sense. But then overall markets really kind of started pulling back. I think it's more profit taking than anything. We've had a nice big rally with no real pullbacks, and I think that that's more or less what we're seeing there. So then also throughout the day we're getting total vehicle sales. I expect those to come in a little bit better just due to all of the hurricanes and things that we've seen in the Gulf and in Florida, so I think we're going to see vehicle sales do very well there. Then FOMC later on today, coming out at 2 p.m. Eastern, they're going to come out with a statement and what they're going to do with interest rates. It's expected to remain unchanged at 1.25%, so I don't really see that changing as well. So that's about it for the economic data. We've kind of talked about crude oil just a little bit, just off on the day, but did go up and test that 55 area was in 55 for a little bit. I talked about this going up and testing that fib level, and we have achieved that. So I would expect maybe we're going to see a little bit of profit taking going on. Gold futures moving higher, more of a flight to safety in a sense that some of the markets, you know, even I talked about this a couple of days ago, it kind of looked a little bit toppy in the NASDAQ. They even had on a put spread in there in the Qs in a sense. But today we're getting a mixed bag. We're seeing gold futures move just a little bit higher, and we're also seeing the VIX spike just a little bit. Bonds moving higher. I think that we're going to see a little bit of this coming back. It's almost up a point, 25 ticks, just about 6 ticks away from being up a point. Don't really see any room for this to go up to the upside. As a matter of fact, I could easily see this being right back down here at the point of control later today after that FOMC statement comes out and interest rates remain unchanged. This is not going to be a area where we start lowering interest rates, just the way the overall economic data points are coming out. I mean, ISM is above 50. Anything above 50 is expansion, and we've been seeing 60s, so they are not going to lower interest rates. So keep that in mind. We've got the VIX. As a matter of fact, when I first started this video, it was up in the double-digit handle. It's starting to come off a little bit as maybe the equities are starting to take a little bit of a turn since I've started this. So let's take a look at that. Dow Jones Industrial Average up 43 points. This looks like it's negative, but it is higher on the day from yesterday's settlement. We did have a blast higher on some of that economic data, but you know, the overall markets just kind of giving up a lot of that ground. NASDAQ, same situation. You know, lower on from where we opened, but the overall market really blasted higher, got another new all-time high intraday, and then the overall markets kind of started sloughing off. E-mini S&Ps positive on the day, so this is the mixed bag I'm talking about. We've got the Dow higher, we've got the E-mini S&P higher, and the NASDAQ lower. And we've been seeing these wheels and pulleys happening as money is moving in and out of tech and into the blue chips and back out again. Just quite a bit of money changing hands, probably getting ready for the fourth quarter as the overall money managers are trying to shore up positions, is what it's kind of really looking like, and that's why we're getting a lot of this mixed bag. Then this is the day chart of the E-mini S&Ps. As you can see, overnight inventory got very long, and then right off the open we got some of that economic data coming out that was bullish, but I think it was basically the overnight inventory. The overall markets just kind of slammed down of them. We're starting to see that bottom happen. The 200 moving average was tested, but now we're starting to move away from that to the upside. So this is the Qs trade. You know, yesterday I talked about this in the daily market commentary. I got in a little bit early. I thought that this looked like it was a little bit of top. We got a bit of a gap on this. Qs kind of looked like the NASDAQ was topping out, and I thought we'd see a little bit of retracement. But if it broke, I didn't wait for it to get confirmed to get into my trade. But if it broke above this high, that's when I was pulling the ripcord on it, and sure enough, yesterday it did break above that high. So I decided to get out of my triple Qs. Now, if we start seeing this market come back down again, I might very well just put this trade back on, because I had it on in the D's. You know, I was long the 135 puts, short the 150 puts. I paid 125 for it. I got out for 110, so a small loss there in both my margin account and in my IRA. Took both of those trades off as soon as it broke above, just like I talked about. It never got confirmed. Today, you know, we're looking like it's a little bit more bearish again. So I'm going to be pretty close to pulling the ripcord, or putting that trade back on. Not really pulling the ripcord necessarily, but putting that trade back on. So haven't done anything yet. Covered this late in the day yesterday. Once it did that, it was almost right after we got done with this daily market commentary. EA Sports, this is our Electronic Arts, I should say, EA, got out of this trade, or got into this trade, talked about it, was going to play this to the upside, so I got in selling short puts in there. And with EA Sports, I went in and I sold the let me just double check. I want to make sure I got my prices right. And sold the November 111 puts in there. Sold them for 60 cents yesterday. Bought them back for 60 cents today. So a scratch, again, I believe it's a win, just because a scratch is a win in my book. And I was directionally wrong. So as a matter of fact, it basically went down and was looking to test my 110 puts, the low being 111. That happened almost immediately. They missed on earnings, as you can see here, negative earnings. They've missed on their all projections for the most part. So I was very happy to be able to get out of that for a scratch. Got in for 60, got out for 60. That's a win in my book. I don't care about the commissions at that point. I'm actually missing a chart here on the triple Qs. Did I do the triple Qs? I believe I did. So that's about it for right now. A couple of things that I'm going to be looking at going forward. We have Facebook coming out with earnings after the close. I'm going to be most likely playing this to the upside. We also have Tesla. I can't get myself to look at Tesla. I thought Tesla was coming out with earnings, but it almost looks like I think they come out with earnings after the close today. Yeah, so earnings after the market today. You know, I would like to play Tesla to the downside. I just don't see, you know, you can't really run a business with making negative earnings time after time again. Somehow Tesla seems to be one of those ones that bucks the trend on that. I'm probably going to stay away from Tesla though, just because that doesn't really do anything for me. Then we can also look at Baba, and Alibaba is coming out with earnings tomorrow morning. I'm going to be playing this to the upside. You know, it's a Chinese company. They do very well. As a matter of fact, I've been on their website a few times buying a couple of things, personalization type things, and it's very easy. So kind of like the way that they have that set up where you can call and get different quotes on your different products that you want. So Alibaba, I'm going to be playing to the upside here as well. So both probably Facebook and Alibaba are the ones I'm going to be playing, both selling puts. You guys probably know the location from watching those webinars on the earnings. My IRA, I'm going to be trying to set it up as a synthetic long, synthetic short puts for the long play. And I'm probably only going to do that with Facebook. Alibaba, I'll be playing both of those in my IRA. So keep your eye out for that. That's about all I got for you guys. The other one that I was kind of looking at was Exelon. May do a strangle around this one. So you have to be a game time decision. I'm going to have to be seeing what I can do with that. I'll be tweeting those out on Twitter, so follow me at Wolfman's blog. Sorry about the EA Sports one. I kind of forgot to tweet that one out, but anyway, that's about all I got for you guys today, other than if you can't take that, take it easy.